The world's central banks will do the same thing. So Russia is just the leader in this. They are the first. Later on, there will be more central banks adding silver to their reserves. And when that flood comes, when gold starts getting too expensive, even central banks will look at the silver and they'll go, the gold silver ratio is up at 80 or 90 or what, if the world's central banks start rushing into gold first, maybe that gold silver ratio gets back up to 120 or something like it did during COVID. But at that point, the world's central banks will change their preference just like the public did back in. And yes, where it says beyond $50. Yes, it's going to be way beyond. $50 an ounce is just an area where it's going to bounce off of resistance for a little while. And then it should blow past it. And I believe $150 silver is absolutely appropriate.
Russia appears ready to shift significantly in its precious metals strategy, with silver emerging as a key asset in its expanding state fund. A recent report from Interfax, cited by Bloomberg, highlights plans outlined in Russia's draft federal budget to bolster its holdings in precious metals over the coming years. The budget specifically mentions intentions to acquire gold, platinum, palladium, and, notably for the first time, silver. This inclusion of silver marks a departure from recent trends, as central banks, particularly in Russia, have focused primarily on gold purchases in response to international sanctions. Until now, silver has largely remained overlooked by central banks. However, this development suggests a potential evolution in silver's role within Russia's financial strategy. MikeMaloney, founder of goldsilver.com, notes that if gold prices escalate significantly, central banks may pivot to silver, especially if the gold-to-silver ratio increases. He parallels the early 1980s when public interest shifted towards silver, indicating that central banks might follow suit, potentially driving demand and pushing silver prices well beyond $50. While gold and silver are precious metals, silver's widespread use in industrial applications has influenced its perception. A substantial portion of the global silver supply is consumed in manufacturing sectors, particularly in green energy, which relies on silver for products like solar panels. Maloney emphasizes the importance of accumulating reserves in both gold and silver. Although he acknowledges that Russia alone may not push silver prices above $50, a notable trend among global central banks, such as Poland, is significantly increasing their gold reserves. This broader shift could pave the way for a renewed interest in silver as a vital component of national reserves. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
But when it comes to accumulating reserves, it really should be only gold and silver. And, as far as Russia probably won't push, by themselves, silver beyond $50, but it really doesn't matter. What we've seen over the past few years here, several years, is that the accumulation of the world's central banks of gold, it's been very slow and measured. Like Poland now is in the, top 10 or top whatever it is of the countries. They just broke in, they broke through a barrier. They've accumulated quite a bit. They just came out with that statement. But when the world's central bank, when stuff starts going bad, and it is going bad, and all you have to do is look at the 30 seconds to midnight series and the data that you helped me put together. It's in the book about the Fed going bankrupt and about the payments that they are unable to make because there's no profits left. They used to be profitable from 1914 until September of 2022. The Federal Reserve was profitable and turned over their profits to the Treasury. And now they owe the Treasury about $200 billion. They've given the banks $500 billion, and it's all in the 30 seconds to midnight. The Fed is bankrupt. The 30 seconds to midnight series is one that everybody should watch. But as the world's central banks start to rush toward, it's like back in the bull market of the late 70s, people were sort of walking at first toward gold and silver, and then they ran, and then it turned into this big rush. And when it did, gold, which used to be $35 an ounce, was now over $400 an ounce. And it seemed like that was really high, $400 an ounce. And so that's when the public started to change their preference to silver. The world's central banks will do the same thing. So Russia is just the leader in this. They are the first. Later on, there will be more central banks adding silver to their reserves. And when gold starts getting too expensive, even central banks will look at the silver and they'll go, oh, the gold silver ratio is up at 80 or 90 or what, if the world's central banks start rushing into gold first, maybe that gold silver ratio gets back up to 120 or something like it did during COVID. But at that point, the world's central banks will change their preference just like the public did back in 1980. And yes, where it says beyond $50, yes, it's going to be way beyond.
The silver market has exhibited a bullish trend in the past 48 hours, with the $30 level emerging as a significant support point and entry opportunity for investors. This ongoing search for value suggests that market participants should consider continuing to buy the dips in silver. MikeMaloney highlights that when the recent patterns broke out, a slingshot effect resulted in a remarkable 50% increase in silver prices over the last year. Those who responded to these signals have reaped the benefits, but the potential for further gains remains promising. Short-term pullbacks are expected to find support around the $30 level, especially with the 50-day exponential moving average coinciding with this price point. On the upside, the $32.50 level poses a resistance challenge and may serve as a target for bullish traders. A daily close above $32.50 could signal a significant upward momentum, positioning silver for even greater long-term growth. Let's get back to the interview.
$50 an ounce is just an area where it's going to bounce off of resistance for a little while. And then it should blow past it. And I believe $150 silver is absolutely appropriate for we did a chapter on silver in the Great Gold and Silver Rush of the 21st century, and we showed that there is nothing that you can measure in modern society that is selling at a discount to its 1980 price. And then as we looked at the expansion of all of the stock market, the currency, several different measures of the currency supply, the price of real estate, the price of this, the price of that from the 1980 high. It was some astounding numbers. Some of them, if you used that expansion, were giving us quadruple digits. So you were over $1,000 an ounce if silver went into the same kind of bubble against other assets that it was in 1980. And as we know, history very often repeats. I like to say it always repeats, but with little twists. And so, yeah, I think $50 is just as sort of a stopping point on the way. It should go up and hit that, and there will be a bunch of people that see that as resistance, and they will sell. But then it'll build another base and blow right through that $50 thing. And that, just remove the word potentially there from the last sentence.
That's right.
Just replace it with go an ounce and go much higher. And anybody that was listening to us, we were pointing out gold had a triple top. It had an inverse head and shoulders. It had a big cup and handle. And then I analyzed silver as well, long before this article, and showed that you had this down-tilted inverse head. You had a bigger cup and handle than gold. You had the inverse head and shoulders. You've got sort of a triple top. And I said that when the breakout happens, there's going to be a slingshot move. And there it is. Anybody that wasn't positioned in silver then or buying then sort of lost out on that slingshot move. But, the fat lady has not sung yet.
Yeah.
It ain't over.
We're just getting started. And silver's up like 50% in the last 12 months. So
exactly. And somebody could have taken advantage of that had they, a lot of people did listen, but a lot of people didn't. And so the patterns were so obvious. And then silver was confirming gold's pattern, and gold drags silver with it. Silver took a little bit of time to also break out, but gold drags silver with it all over the place. There's a fairly tight correlation, but it's not a perfect correlation, and silver lags. Yeah. So, right. I just want to say that, for the audience that, yes, he's got this chart in here. This chart is great. But we've been over this many times, and we were showing it as it was developing. And so that 50% move, that's big, but it's nothing compared to when we hit $50 again. So, yeah.
The evolving role of silver in Russia's precious metals strategy signifies a potential shift in the global market landscape. As central banks begin to recognize silver's value alongside gold, particularly amid rising prices and increasing demand, the outlook for silver appears increasingly favorable. The recent bullish trend suggests that investors who seize the moment may benefit significantly. As we look ahead, what do you believe will be the impact of these developments on the future of silver prices and its role in global reserves? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.